Hi, this is Ashok here. I'm a trainer for CFA and you are watching FinEx training YouTube channel where I make content pertaining to CFA and investment banking topics. Okay, so in this video, I'm going to solve one example for cash flow, free cash flow from financing and free cash flow to equity using cash flow statements. So the question is over here. This is the cash flow statement, cash flow from operating activities. So net income, adjustments, depreciation, non-cash expenses, working capital, increase or decrease in account receivable. So all these informations are given here, and then you have net cash from operating activities. Then you have cash flow from investing activities, then cash flow from financing activities given here. So this is net cash from financing activities, and then some other informations are also given here. Net change in cash and cash equivalent, then cash and equivalents at the beginning of the year, and then cash and equivalents at the end of the year, and then interest paid and income taxes. These are the information given in the question or given in the cash flow statements. Using this, I need to find out cash flow from financing and cash flow from free cash flow from financing and free cash flow from equities. Okay. So while doing this sum, I'm not explaining the formula because the logic behind the formula I will tell you in another video. But here I will just give the formula and then directly I will be solving it for the benefit of time, right? So and by the way, like cash flow from operation, investing and financings are given here. If I want to calculate cash flow statements, cash flow statement is equal to cash flow from operations plus cash flow from investments plus cash flow from financing. So I can calculate it this way. Operating is 6222 here, plus investing is 2379 okay, 2379 investments, yeah. And then cash flow from financing, net cash flow from financing, it is 2475, it is in minus, so minus 2475. So if I calculate all this, it will come to it will match with this net change in cash and cash equivalent. Okay, that is 6126. It will come to 6126. Similarly, you can do for company B and C. And also another way is, because they have given here beginning and ending cash 50 and 6176, if you minus this, you will get 6126, this number. Okay, so this is just one way to cross check this and find out cash flow statements. Okay, so but otherwise we are here for doing a sum on free cash flow to financing and free cash flow to equity. So let me write the formula first. So free cash flow to financing, so free cash flow to financing, so there are four ways, there are four formulas. Okay, so number one, net income, then plus depreciation and other non-cash charges, plus interest into 1 minus tax rate, then plus or minus working capital investments. So depending upon the situation, we have to decide whether it should add or minus. Mostly it will be minus, okay, but exceptionally it can be added as well, which we will be seeing in this sum. Okay, then plus or minus fixed capital investments. Even here mostly it will be minus, but exceptionally some cases can be added as well. Again, why so, that we will be seeing in some time. Okay, so this is the formula for free cash flow to financing. Similarly, you can do this using EBIT into 1 minus tax, then plus depreciation, then minus working capital investments, plus or minus, it can go like plus or minus. Similarly, I'm writing a plus or minus fixed capital investments. Similarly, now next one is EBITDA into 1 minus tax, then plus depreciation into tax rate, then minus working capital investments, plus or minus, here also plus or minus fixed capital investments. Then the last one, cash flow from operations, then plus interest into 1 minus tax. Okay, this is 1 minus tax. So 1 minus tax, then minus fixed capital, or again plus or minus fixed capital investments. Okay, so this is the formula. Now for this sum, net income is given. So what I am going to do is I will be using this formula to calculate free cash flow to the firm. I can also use, because cash flow from operating activities is given, I can use this formula as well. So I will be using both these formulas and doing this sum. Okay, then post that I will start with free cash flow to equity as well. So now free cash flow to that firm. So let me write this formula once again. Net income, okay, net income plus depreciation and non-cash charges plus interest into 1 minus tax rate. By the way, tax rate is not given in this question. For company A, it is 35% I am taking. Company A tax rate. Company A's tax rate is 35%. Company B's tax is also 35%, and company C's tax 30%. So this information should also be a part of the question. Okay, fine. Now next one. Okay, then plus or minus working capital investments, plus or minus fixed capital investments. So now let me do this for company A first. So company A, similarly I will do for company B and C as well. So for company A, net income, the 4844. So net income 4844. Then depreciation and non-cash charges. So depreciation and non-cash charges, 500 plus 1000 comes to 1500. Okay, so it comes to 1500. Then next one, plus interest into 1 minus tax. So interest payment is shown at the bottom here, 353. So 353 into 1 minus tax rate is 35%. So if you calculate, it will come to 229, and then plus or minus working capital investments. So working capital, you see here, working capital, account receivable is working capital, inventory is working, these two are, inventory and account receivable are current assets, accounts payable and other current liabilities are current liabilities. Okay, so working capital is current assets minus current liabilities. So now here this is minus, so increase, so minus is representing this bracket, increase. So increase in account receivable 452, that means this is cash. I have to think like account receivable is increasing. Okay, fine. And so this is 452, and this one, current liabilities 540 minus 210, 540 minus 210. So 540 current liability, increase in current liability 540 minus 210. So increase in current liability means I'm getting cash 540, but then I'm paying 210. So 540 minus 210, net current liability over here is 330. So 330. Okay, so balance comes to 122. So 122, but then this current asset, this is the bigger number, current assets. So I will take this as minus 122. So here 452 bigger number is in minus. So 452. So I am taking this in minus 452. Okay. Then plus or minus, this is fixed capital investments. So fixed capital investments, fixed capital is 2379. See here, this is sale of fixed capital investments. Okay, so sale, so when you are doing sale, this is my cash inflow. Okay, my cash inflow 2379. So for that reason I will add 2379. So when I calculate all this, it will come to 8830. Now the same one, if I do using cash flow from operations, okay, or let me do this for company B and company C as well over here itself, and then I'll do this cash flow from operations also. Okay. So company B, net income comes to 1212. So 1212. Depreciation is 288, and then interest into 1 minus tax rate. Tax rate I'm using 35%. Interest is 50. So 50 into 1 minus 35%, if we calculate, it will come to 33. Okay, so 33, and then next one is plus or minus working capital investments. So working capital here, this is in minus, so total minus is 350, and this is in plus 114. So 350 minus 114, 350 minus 114, 236 it comes to, and I'll take the bigger number sign, that is minus here. So 236, so 236 minus, okay, 236. Then fixed capital investments is 1000 minus, so 1000 minus, so if I calculate, all this will come to 297. Similarly for company C also, 15409, depreciation 3746, then interest into 1 minus tax. For the third company, we are taking tax rate as 30%, and interest is 552. So that if you calculate, it will come to 386. Okay, 386. Then plus or minus working capital investments. So working capital, both are in minus over here, and account current asset is in minus, and then current liability, I can take the net figure as 347. Okay, so current assets will be 536 plus 803. So 1339, that I will minus with 347, it comes to 992, and I'll take the bigger number sign, that is current asset, which is minus. So 992 minus, okay. Then fixed capital investment is for the third company 3463, it is mentioned here. So 3463, it is in minus, so I'll take minus. So when I calculate, it will come to 15086. Okay, now if I have to cross check with, let's say, if I have to cross check with cash flow, so the formula is cash flow from operations, then plus interest into 1 minus tax, and then minus, plus or minus fixed capital investments. Okay, so cash flow from operations for company A was 6,222. Then interest into 1 minus tax, you can get it from here, 229 added. Then fixed capital investments, it is in plus form. Okay, so again I will write plus 2379. So you calculate, it should come to 8830, which will match with this number. Similarly, for the second one, cash flow from operation is 1264. Then plus interest into 1 minus tax is 33. Okay, plus then plus or minus fixed capital investments. So fixed capital I have put in minus here. So I'll do the same thing, minus. So this balance, if I calculate, this will also come to 297, which matches with this number, 297. Similarly, for the third company, if I do, cash flow from operations is third company 18163. So 18163 plus interest, this is 386, interest into 1 minus tax. Then fixed capital investment is minus 3463. I'll keep it in minus. So if you calculate, this also will come to 15086, which will match with this number. Okay, so this way I have done free cash flow to financing. Now if I want to do free cash flow to the firm, okay, so free cash flow to the firm, so let me write the formula first. So to free cash flow to equity, now I am supposed to do free cash flow to equity. Now the formula goes in 3 ways. Okay, so number 1, I can do this with this formula: net income plus depreciation and non-cash charges plus or minus working capital investments plus or minus fixed capital investments, and then plus or minus net borrowing. Okay, this is one formula. Next one is free cash flow to the firm minus interest into 1 minus tax rate plus or minus net borrowing. This way also I can do. Or third one is cash flow from operations plus or minus fixed capital investments, then plus or minus net borrowing. This way also I can do net borrowing. Okay, so let me use the first method now. So I'll write the formula here. So first one, net income plus depreciation and non-cash charges, other non-cash charges, plus or minus working capital investments plus or minus fixed capital investments plus or minus net borrowing. Okay, so for company A, first, so net income is 4844, depreciation and This one comes to, and non-cash charges 1500 or 1500, which I'm supposed to add. Then working capital we have already calculated. So working capital, it was minus 122 for company A, minus 122. So I will say minus 122. Fixed capital investments will be plus 2379, plus 2379. So 2379. And the net borrowing I have to check now. So net borrowing will come in financing activities. See here. So total there are three transactions here. One is notes payable, long-term debt, and then stock dividends payment. So stock dividend payment I will not consider because that is not actual raising capital or repayment of capital. Okay, so I will not consider this stock dividends. So I will go for only notes payable and long-term debt. So net is 25 minus 1500 comes to 1475 minus, because 1500 bigger number is in minus sign. So 1475 I will take in minus. So if I calculate all this, it will come to 7126. Okay. Now similarly, let me calculate for company B also. So company B net income 1212, then depreciation 288. So depreciation 288. Working capital investments, I can pick it directly from here, 33. Okay. Working capital investments. Sorry, working capital investment is 236, not 33. That is interest. So 236 working capital. Okay, so this is 236. So 236, which was in minus. Okay, it is in minus 236. Then fixed capital investments. Second company is 1000 minus. So 1000 minus, and then net borrowing for the second company is very simple. It's 1000. No, sorry, it is borrowing. So borrowing is financing activities. So 3000 through notes payable cash inflow is happening, and 1000 cash outflow. So net cash inflow of 2000. So 2000 plus cash inflow 2000. So you calculate, it will come to 2264. Similarly, let me calculate company C, third company C. Company C is 15409. Depreciation is 3746. So I'll add depreciation 3746, and then plus or minus working capital investments, working capital and fixed capital investments. So for third company, working capital, third company 992 and 3463 both are in minus. These two, 992 and 3463 both are in minus. 992 and 3463 both are in minus. And then net borrowing for the third company is 1238 minus 1379. Okay, so this will come to 141, and I'll take the bigger number sign. So there is more cash outflow, 1379 minus. So when I minus, I get 141 and bigger number sign, that is minus. So I calculate, I get 14559. 14559. This I can cross check with this formula also and this formula also. Okay, so let me use the second one now. Free cash flow. Now, so let me write the second one. Free cash flow to the firm minus interest into 1 minus tax rate plus or minus net borrowing. So now company A. So free cash flow to the firm for company A, it is 8830. 8830. Okay. Yeah. So all numbers are already there. We just have to pick it up. Free cash flow to the firm for company A. Free cash flow to the firm. Okay. So yeah, here it is. 8830. So this is what free cash flow to the firm. This is free cash flow to the firm. This is also free cash flow to the firm. Okay. So 8830, then minus, so minus interest into 1 minus tax. So let me take company B altogether. Let me try to do, if I can do that way. Company B, company C, free cash flow 299 and 15080. 299 and 15080. Then interest. So interest is, okay, interest I have to minus in this one. So interest 229, 33 and 386. Okay, so I will minus it. 229. Okay, so first one interest is 229. Okay, let me see here. Yeah, 229. Here also 229. Okay, so interest 229. I'm supposed to minus. Then for company B, 33. 33 I will minus, and then for company C it is 386. So 386 I will minus. Net borrowing I can directly copy paste from here, 1475, and then 2000 and 141. So if I calculate this, okay, so 8830 minus 229 minus 1475, it will give me 7126, which will match with this number. Similarly, this will give me 2264, which will match with this number. Similarly, the third one will give me 14559, which will match with this number. Okay, so I have done this using the second formula, free cash flow to the firm. Now if I have to go with the third formula, that is this one, cash flow from operations. So let me try out with the limited space available. So the formula is free cash flow from operations plus or minus fixed capital investments plus or minus net borrowing. So company A, company B and company C. Okay, so company A cash flow from operations, I can get it from here as well, 6,222, then 1264, then third one 18163, 18163. Now plus or minus fixed capital investments. So fixed capital investments we have seen here 2379 1000 2379 1000 in minus and 3463 will also be in minus here. Okay, then net borrowing I have to copy from this 1475. Okay, 1475, then 2000. This 1475 will be in minus 2000 and then 141. So if I calculate all this, it should come to 7126 it will come, which will match with this number. Similarly, this one 1264 minus 1000 plus 2000 will come to 2264, matching with this number. And third one 18163 minus 3463, this 141 okay, one second, this number financing, this is borrowing. So borrowing is okay 141, but I'm supposed to take bigger number sign. I'm sorry, it should be minus. Okay, so it should be 141 minus, yeah, but I wrote this number correctly, 14. Let me just calculate again and check. 15080 minus 386 minus 141, 14553. Comes to 15080 minus 386 minus 1238 minus 1379, 141. So 141 I'm writing here, 141, fine. Okay. Okay, this is 86. Okay, 15086. Fine. When this is 86, so this is 86. Okay, Yeah, so this matches. Okay. So this is yeah. So this number I took incorrectly as 80. This is 86. Okay, the last one is 6. And then you key in the number, it is all matching properly. Alright, so this is just one sum about free cash flow to the firm and free cash flow to financing, free cash flow to the firm and free cash flow to equity using cash flow statement. Thank you so much for your time.